Hi, folks. Welcome from FractalWave.works. I'm here with Merrill, and Merrill's got a 20-year background as a computer scientist, mathematician, and has developed some trading systems for a lot of hedge funds around the world. And Merrill's been involved with us right from the start with Fractal Wave. And this project goes back several years. As you know, I've been involved with Dan Winter for many decades now. We've developed many inventions and put some lots of things onto the market. And Dan was very famous for applying the golden mean ratio and for all sorts of dynamics, architecture, and the relationship between science and spirituality, and also the harmonics involved in healing. And Dan developed many, many moons ago the biofeedback mechanism to look at human emotion through the heart coherence technology and so forth. And a colleague of ours, Bruce and myself, pitched it to Dan that this could really be applied to the stock market, because the stock market is what we call a chaos system, a rhythmic, chaotic system, so to speak. And a way to sort of decipher all of that is with the golden mean ratio, but it required a lot more to be able to gather those signals and to read those signals. So Merrill's been involved right from the beginning. Merrill, tell us about how you sort of started to take Dan's initial algorithm ideas about the golden mean ratio and apply it to our fractal wave system.
Yeah, absolutely. So yeah, Dan and I met back in probably 2009 over in France, and we had a few discussions. My background being mathematics, physics, and software engineering. I started professionally in '92. So basically, the idea was to take the golden ratio and look for strength in a signal, and look for how when it emerges, and these signals emerge from chaos, and we get a golden ratio strength that can indicate the beginning of a new cycle. And we look for strength of cycle, and also would also tell us the length of the cycle, and that's done through Fourier transform to help determine those things. And then we do some math on top of that to figure the ratios of the cycles, to determine dominant cycles, and then a fair amount of other mathematics involved to be able to run the test, to look at volatility, to analyze probability, to look at correlations, different things like that, a volume, a fair number of things that I know that work from my professional background in building systems for hedge funds. And over the years that was built on a couple of years worth of data, and tested out of sample on 2 decades worth of data, and it held up. And that's the sign. That is a great sign that it's a good system, because it holds up on out of sample data. So that's basically the genesis of it, where the fractal waves looks for an alpha cycle, which is a term that I came up with for the most dominant cycle. And then what our system does, which is unique to other systems, is that it tells you when to get out. Like if it doesn't hit, it gives you a target of what the expectation to get out of. You know, hey, if you get in at 10, we're expecting to get out at 12 or whatever, right? It gives you that analysis based on a number of things. And then it also gives you the time frame. You know, hey, this should happen within the next week, or this should happen by June 17th or whatever. It's usually typically between a few days and maximum 6 weeks of these swing trades that we're looking at. And so that's one of the things that's unique about this system, is that you know when to get out. So if it hasn't hit the target by the time you're supposed to get out, you just get out anyway, because that's the cycle strength. It didn't reach the goal that it was supposed to, and the time now has come into play where the cycle has come around, and it should be going down rather than up if you're in an up cycle, right? So that's kind of a high level. And then we're going to go through a lot of the details and analysis upcoming, which we can watch those and really get some more details on how to trade those.
Yeah, we'll switch gears here, and basically we're going to get some of the fractal wave signals up that you receive by email. And Merrill's going to go through a couple of them and show you how essentially you'll take those signals and then do like a little bit of further analysis. But the system is very much set up for you to take the entry point, which is the next day. You get the signals every day in your email box for the opening market for the next day. Essentially, at the end of trading in New York, the fractal wave algorithm crawls its way through tens of thousands of stocks, and it's looking for what it's looking for, which is our predictable signals. And as Merrill said, it's quite unique. It gives you the exit point and the expected profit margin. So we're going to give you some examples of how to use these signals and to put them into your trading platform. So Merrill, today's little demo is about explaining the signals and then how to utilize the signals from Fractal Wave.
Well, thanks, Roger. So, yeah, I've been involved with various hedge funds and trading system development for many years as a professional and as a hobbyist. And essentially I've been involved with the market since around 92. So really pushing almost 30 years. And over the last 10 years, we've been in development with this particular system, which has been honed and crafted over time and developed over 30 years of data to come up with what I consider a fairly robust tool for helping to decide or give ideas for trades. There's enough stocks coming through that it'd be pretty difficult to trade all of them unless you had a substantial account. There may be anywhere from 15 to 40 stocks a month that we send out. And so if you're going to have a portfolio of 40 stocks, and some of them last a few days, some of them last 4 or 5 weeks, depending on the cycle length. So you could be in a fair number of stocks if you take every single one of them. But it just depends on what you're doing and what your account size is. So that's some of the background. So this first stock that was on the list is called BYD. So I come over here into Robinhood, do a search on BYD. It's going to show up for the day. Okay, so this was the day. The actual price it's looking at for entry on Monday is $59.44, and that's really just picked off of what it closed at because we use the closing price, that's because that's all we have, right? So we use the closing price. So we're just going to make the assumption or presumption that that's going to be the price Monday morning. Now, that's not always the case. We know that because of after-market trading and pre-market trading. So I'll tell you how to deal with that and some things that you can do going forward so you don't get confused about that particular price. And then the expected exit price is $65. These numbers don't have to be exact, but this is what we're looking for. And then we're looking for around this percentage of profit. And look at the exit date. So the exit date is 6/23. So essentially, it's a 4-week trade is what this is looking for. So what I'm going to do is I'm going to go back and look, well, what has happened in the last week? So last week, the high has been 62. We've come down, and the low here on May 20th was 59.44. So 57, it went down to 57 something, and then it's bumped up a couple bucks or more, up to 60. Now it's kind of come down just a little bit. So that's the last week. The last month, we've been up as high as 68, 69. So that's something that is important to look at is this exit price, $65. It's important to see that has it been to that price recently? Has it been something that seems reasonable that it could hit that price, $65 in the next month? Well, we have been at $65 actually as recently as $65 was on May 10th. So as recently as a couple of weeks ago. So is it reasonable that within a month it could be back up to there? Okay, well, based off of this, okay, that's possible. So let's look at the 3-month. Okay, again, we're still looking at the high of 68, 69. Let's look at the 1 year. So what I do is I do take about a year's worth of data, and I look at the last 6 months of cycles, right? So in this case, we're starting about right here, and I'm trying to find, and in this case, we're looking at about a 20-day cycle where the days, so even though it's 30 days, I'm looking at weekdays, I'm looking at trading days. So inside of a month, from May 23rd or 24th to June 23rd is 4 weeks, which is 20 days. So that's the way I do that analysis. That's a 20-day cycle. And so what we're looking in here is, or 4 week if you look at actual dates. So I'm looking at in here, has there been moves during this period that we have moved 8 or 9%? Well, clearly we've had a pullback here at 46, and we went up, 54 within, from February 8th to January 29th. So clearly in just over a week, 9 or 10 days, we did hit that target. Again, down here, we had a pullback on the 18th, and within, so what's the price there is 51, 52, and we have come up to 55 and even 62. So we've gotten a solid, more than 10%, and that's without a huge pullback from this low here. Within, again, how many days is what I'm getting at? So a couple weeks. So then again, here's another one where we're down at $60, and then we bump up to 65. So a $5 move, which is about what we're looking at now. And that happened from March 5th, March 3rd, 4th, 5th, right in that range. So again, another week and a half. And then we had these various moves here, which also did something. Now this last cycle maybe took a little bit longer, 56 up to, so what's the date on that is, we're looking at March 29th, and to get up to the price range, April 12th. So 2 or 3 weeks. And again, we see from the 63 on April 20th, up to 69 on another week. And so now we've had a pretty big fall here. So one thing that you want to look at is like, if we're going long, are we in a uptrend? Or and here we can clearly see that we have been in the last year, in the last 6 months, but there has been some volatility. Well, the volatility is what allows us to make money. Without the volatility, I mean, you can still make money if it's a flat completely up, but if it's flat without moving, you're not going to make any money, or if it's flat moving down. So the volatility allows us to make money. So there is enough volatility to catch an 8 or 9% move. And we have been down. Now notice we didn't get the signal. We didn't get that signal on May 11th as it continued to go down. We didn't get it on the 12th, but we got the signal right over here on the 21st, I believe is when it went out, right here, 59. So what's that saying is that according to the analysis, the math that we looked at, various factors involved. It's saying, hey, we think that from what we can tell, looking at this mathematically, there seems to be a signal that we're going to be able to hit an upcycle, and we're going to give it a month to make an 8 or 9% move. Okay, so and when I look at this and I look at the chart here, that looks reasonable to me. What I just looked at and analyzed, that looks reasonable. I believe by visually looking at it, that it's reasonable to get an 8 or 9% move, and it may not even take a whole month to do that. We may hit it in a week or 2 weeks, right? So the idea is that you, Monday morning, you would enter that trade. Now you may not get it at that price. You may get it at a little bit higher, but you got to be careful. You don't want it to go too far away. And those are discretionary things. And the other thing is, if you can get a better price, great. What I would do though is instead, if say the price drops, somehow spikes down $1 or something, and you decide to get into it, what I would do is not hold fast to the 65, but I would take the percentage gain and say, well, let's go for 8% or 9%. Let's go for that move, and then you figure out the percentage. And so maybe you get out at $64 if you get in at 58, something like that, right? So you make those adjustments. If you get in at higher, so here's the caveat: if you get in at a lot higher than this, or any bit higher than this, 59, say you get in at 60, I would still cap it at 65, me personally, right? So if you get in at lower, I would go with the anticipated percentage move. The point is not as important. It's just like, hey, we're looking around this. It's not an exact science, right? And so we're looking at this target and 8%ish. And then if we're lower, then just lower the upper price to give yourself a better chance of hitting that. Now, that's not to say that it won't go up to 69 or 70. I mean, we don't never know, but I'm saying that's up to you. What I'm saying is for this particular system, the way that it's intended is the way that I'm explaining it, right? And so if you're going to trade it according to these guidelines, this is how I would do it and how I would, well, I'm not giving any recommendations per se or what to do, but I'm saying for myself, that's what I would do. And that's how how the system was intended. So, okay, so there's that one. So now, so that would, to me, looks like a good option. That looks like a good opportunity for if you're going to trade this system. So another one is this GTHX. This was another stock that came out on Friday. And so we're going to put that in there. And that's this G1 Therapeutics. And so the price that we have is 21.16, which is the closing price. And then what I'm going to go ahead and bump it out for a week. And what we're looking at is we're looking at 11%. So we're looking up to go a little, almost $2.50, $3, not quite $3. So in the last week, has it hit 23 in that? And how long are we looking at? We're really only, this is actually only about a week trade. So the expected exit is about a week. And so, yeah, 23, we haven't hit 23 in the last week. Let's look at the last month. Okay, so I'm going to look at some peaks here on the 17th, so $22, $22. And it's been a little while since it's been at 23. I mean, here we're still at 22. How's that possible? 22.78. What was it over here? 22.0. Let's go to 3 months. Peak right here is 26. So it has been at 23. The last time it was at 23 was, and we're looking at 23.80. So on April 16th. So really about 6 weeks ago was the last time, but it has hit that. Let's look at the year. So it's actually been quite a bit higher than that. It's been up as high as 32.50, 32.60. So, and now it's retraced, it's shot up again, it's come back down, and now it's saying, our signals are saying, hey, it looks like it might enter an up cycle again, a 1 week up cycle. You see these 1 week up cycles. So $20 up to 23. So a solid 15% or so there. And that happened in literally a week or less than a week, a few days. So it does, the truth is it does hit like on the 29th, 21.53. And within 1 week, we hit 26.19. So it did well over 10%. In fact, if we're 10% would be $2, and say it's just a rounding, say that's $22 up to 26. So literally $4+ it made a 20% move in a week. So can it do this? So then the question is, has it shown a history of moving 10 or 11% in a week? Yeah, it has. It has shown a history of doing that, right? And shown it recently. We're looking for the last month, the last 2 months, the last 3 months, right? That's how has it behaved in recent history? Has it had 8 or 9%, or in this case, 11% moves in the last month or 2 or 3? Yes, it has. Right. And so then the last time we had was not, basically $20, a little less, and it's gone up to 21. So not again, so about a 2%, a little over 10% move here also. If you go for 1974, 1920, 21. Yeah. So a solid 10% move, a little more than that in about a week. So it is showing that. And that, so to me, that's like a confirmation of what the signal's intent is to do, is to identify possible swing trades that could hit this in a certain time frame. One of the things that is unique about this system is that we actually give the time frame of when to exit, when to look for exit. That this is unusual but we do that because we know what the cycle length is, the full cycle length, and then we chop that according to where the peak of it, in theory, this in theory would be, based off of a cycle, an up cycle, half circle at the peak, and just over that to give it flexibility. So you could put that. So the idea is you put the price target in there, and then if it doesn't hit that by the target date, then you close it out no matter what. Whatever you're at, you just close it out, right? Because at that point, then we've determined then, I mean, it's possible to give it a couple flux days. I mean, like I'm saying, it's not perfect. I mean, nothing is, the market's changed and things like that. But the idea is if it hasn't hit that by that date, then it's kind of run the up cycle of that particular cycle of what the original estimate was on. So then the idea is you close it out and you either take profit on whatever you have. Say you only got a 5 or 6% take profit in there instead of 11%, or say that you're down a little bit. Well, go ahead and get out, because obviously it's not doing what it was supposed to be doing, right? The intent was, hey, we're in an up cycle, so it should be going up, right? And if it's not doing that and it's waited a time period, then at that point, the only strategy you have is called the hope strategy. And that's not a good strategy to be trading off of. So you want to go ahead and close that out and minimize your losses. Well, part of the one thing that we've done for our live accounts that we've traded as a company is we have had 5% stops on, right? So 5% of what we're willing to lose on a particular entry, and that's helped to minimize whatever losses. And usually it doesn't, on a most of the stocks wouldn't hit that anyway, but sometimes they do. So if it completely ignores the signal, then you don't want to be in it, right? Then the signal, it didn't pan out that time. That's the risk that's involved with trading, right? And so you need to accept that it's possible to go against you, and you need to have the contingency to not ride it all the way down to zero. And that happens to be, in our case, a 5%. You may determine it to be something different, right? But you also don't want it too tight. You want to have a little bit of flux, but you certainly don't want it 20%. I mean, 20% seems a little outrageous to take a 20% loss, but you make your own choices on those, but that's just the thinking on this system. Okay, so this one, would I trade it? Yeah, this one looks like a good option, a good opportunity. It really hasn't gone much below. Now, I mean, the reality is it's gone to 1957. We're getting in at 2116. So it would be about a 10% if it did break below that. And so maybe in this case, you say, oh, I'm going to do a 10% loss because we're looking for a 10% gain. And also we know what the low is there. And so there's some support and whatnot. But anyway, make your own decision. I'm just giving you some tools to help you analyze and how I would look at it. Let's go to the next one, IVC. Now, out of the gate, looking at this one happens to be a 4.75. I don't know if I would trade something too low. 5%. Yeah, okay, we could still do that. Some of them might be a 1%, and maybe we just pass on that because it might not be worth the risk. All right. Any questions at this point, Roger?
No, that's good. Essentially, for those who are, say, beginning trading, you've always got the option when you enter the trade to do it at what's called limit or market entry price. So, if you take this figure, the entry price, you can either put a limit in and say you want it at that price, or as Merrill mentioned, you could go 1 or 2 or 3% lower or higher. Or you could do market entry, which will automatically just give you the going rate, so to speak. That's for folks who perhaps aren't watching the market in the morning. A lot of people might want to enter in the night before, because in various platforms you can enter the trade and you can essentially put in the trade before the market opens, and you can say, look, I want to buy it at this price. They're usually called brackets, and you can put in automatically, you can, not automatically, but you put it in also the profit exit price, and you can put in the 5% stop loss. So within a matter of seconds, you can take these signals and plonk them into your trading platform. And then when the market opens, it's all automatically done for you. So you can plonk in, several trades if you want, or select, as Merrill says here, you can go through it and select the ones that you think are going to be really, really good, and either put them into, the limit or the market price. If there's a good range there, then I often just do the market price, because you're going to get it close to that. If there's a tighter range, then I often put in the limit price, the exact price that you've listed here. So do you have any other comments about entering the trade?
Yeah. If you're gonna, I know people that trade the system that they would do exactly what Roger said. The night before, they'll put in limit orders on them and put in what their entry price is, what they want. I know sometimes they do it at market also, but then they put their exit price in there. So they already know the exit price. They put their stop in there, all that kind of stuff, right? So you can do that the night before. This is why we send it out, so you could actually do that. Regardless, I would still,